The groundwork has been laid for the 40-year mortgage, and we're going to talk about some possible unintended consequences of it today on Major Money Matters. Welcome to Major Money Matters. My name is Major. I'm the host of Major Money Matters, and I am a mortgage broker powered by Edge Home Finance. And today we're going to talk about something that's very important and how the FHFA has essentially laid what I believe to be the groundwork for the 40-year mortgage. Now, let's back up a little bit. Now, back during COVID, when people were saying, hey, when the moratorium ends on mortgages and we're going to have a bunch of foreclosures and houses are going to flood the market's going to crash and all of this stuff, I said, not so fast. And the reason I said not so fast is because of government intervention. And we saw this over and over again. The moratorium got extended, and then eventually the conversation about foreclosures went away as the economy began to open back up, and we began to see the fact that this is not really going to happen. And now we're saying, hey, because of rising interest rates, things could change, and I'm not saying that's not going to happen. I'm saying that indications are there's still going to be a lot of government intervention in order to keep the housing market from essentially going down or crashing. Now, let's talk about what the FHA has proposed. Now, the FHA has proposed, and I'm going to go through this document. I don't do this often, but I want to go through this document line by line in order to make this succinct and figure out exactly what they're saying in this proposal for a 40-year mortgage modification. Now, for people who are like, hey, 40 years is too long, that's absolutely ridiculous, there's no way people would do a 40-year mortgage, I bring up a couple of things. Number one, how is it that a 30-year mortgage ever became like standard? It used to be that people did 10 years or 15-year mortgages, and just eventually, as housing prices went up, people figured out, hey, if I just did a 30-year mortgage, I could elongate my pay or make my payments smaller by elongating the term. When in actuality, people don't usually stay in a mortgage for 30 years anyway. You're likely doing some type of cash out refinance, some type of streamline modification, or not modification, some type of streamline refinance to that mortgage. The average amount of time that somebody stays in a mortgage is actually about 7 years. That's based on data. Okay, so even if you look at situations over the past couple of years, we tend to hit a refinance boom, as we call it in the mortgage industry, about every 5 years. And you hit this refinance boom, and what happens is people refinance their mortgages. Sometimes they shorten the term on those mortgages, but most times they're starting those terms over, and they said, hey, I'm not going to pay off this home because I'm not going to be in this home forever. I'm eventually going to sell it at a profit and move on to my next home. So really, there's no need for me to be into a 40-year mortgage. You may have some situations where people take a 15-year mortgage, 10-year mortgage on lower loan amounts, but with higher prices right now, most people are not doing a 10-year or 15-year mortgage. They're doing a 30-year mortgage and not staying in that home for 30 years. They're simply selling it. So the other thing I want to bring up to you is car payments. Car payments were not always 6 months, or car payment terms were not always at 6 months or 6 years. Sorry, I should have said 6 years. They were not always like that, or 4 years or something. It used to be that loans on cars were 3 years, but the prices kept going up. So what happens, the prices kept going up, then you started seeing people finance those cars for 6 years, 8 years now. There's many car dealerships that have 8-year financing. So if you make the term longer, you can make the payment more manageable, and then that person drives that car and then sells that car or whatever, and they're just worried about paying the monthly payment. Am I telling you that's a great financial strategy? Nope. I'm telling you that that's just the way things are right now. How do you think that people are buying cars that are $50,000, $60,000, $70,000? They're elongating the payments, and they're saying, hey, I can afford that monthly payment. So not a great financial strategy, but it's just the way things are. So let's get back to the FHFA and talk about the effect of going to a 40-year term right now. So I want to back up again. I'll tell you that the first thing that the FHFA did is during COVID, they started putting a LLPA, as we call it in the loan industry, a loan level pricing adjustment on second homes. Now, who buys second homes? People that have money to buy second homes. But what the FHFA did was they didn't want those second home buyers, or they saw this trend of second home buyers simply buying up the inventory, and they wanted more first-time home buyers to get into the market. So they put a LLPA, loan level pricing adjustment, or a higher cost for the loan onto the pricing, and this is what you had to do if you were doing a second home. So as people did that, then you started to see some second home buyers fall out of the market and not pay the money because the loan was so much more expensive. I'm not going to go into the details of how much that LLPA was. It's just that that loan was so much more expensive. So what happened was they started to decrease the amount of second homes that were being bought. And then by default, you have more homes available for first-time home buyers or people who are buying primary properties. Okay, so let's talk about what they've said now. They've talked about, I'm going to go through this a little bit. The 40-year mortgage is a new loss mitigation retention option designed to help borrowers who cannot achieve a minimum targeted 25% reduction in the principal and interest portion of their mortgages. So what they propose is a 40-year mortgage modification at this point. They also have opened it up for service providers, mortgage service providers, to give comments. And this comment period is supposed to end. I'm looking at my calendar right now. Comment period is supposed to end May 31st. So about 5 more weeks as of the release of this video of service providers making comments about, hey, how they feel or how they think this process is going to work with a 40-year mortgage. And they have to submit these comments to the FHFA. And when I say service providers, I mean the servicer of your loan. Some of you may have a loan with this, let's say, United Wholesale Mortgage, and their servicing department services the loans, or Freedom Mortgage, their servicing department services those homes. New Res, all of these are servicers. Whoever you pay your mortgage to, that's pretty much your mortgage servicer. All right. So what happens is these servicers are going to submit comments to the FHFA. But as they're submitting comments to the FHFA, I could almost guarantee you that some of those servicers are going to say, wait a minute, why aren't we doing this just for regular loans? Now, there are some people who will say, hey, there's already a 40-year mortgage available. And those 40-year mortgages are typically in the non-qualified mortgage space. There's qualified mortgages that include VA, USDA, FHA, and conventional. Those are qualified mortgages. And then there are non-qualified mortgages, which are simply private investor or portfolio loans. Some banks may offer a 40-year mortgage now, but it's not packaged and sold on the secondary market like the qualified mortgages are. If the 40-year mortgage makes it into the qualified mortgage space, it will certainly impact the housing market. And I will tell you exactly how it will impact the housing market. I'm going to do a quick mortgage calculator here, and I'll bring this up just so you can see what I'm seeing. So let's say you're buying a home at $500,000, or you're making an offer on a home at $500,000, and you're doing that at a 5% interest rate, which, just arbitrary interest rate. At a 5% rate, you're buying a $500,000 home. So I'll put this number in here, $500,000 home. And you're going to do that over a 30-year fixed rate, okay? And I'm going to strip out property taxes, and I'm not worried about property taxes and any HOAs or anything. We're just dealing with the principal and interest portion of that payment. So you're looking at a $500,000 home, and you're going to pay $2,681 at a 5% interest rate for the principal and interest portion of that home. That's at a 30-year mortgage, 5% interest rate. Now, let's say you know that there's a 40-year mortgage available, keeping in mind you're probably not going to keep that mortgage for 40 years. You're going to keep it and you're going to have that home and then sell the house or refinance or something. So the 40-year mortgage really might not matter to you. So let's say you're going to do that at 40 years now instead of 30 years. If you do that, then you know that your purchase price can go up to $556,000, and you would still be at approximately the same monthly payment. So you would offer higher than $500,000 in order to get this, because you know that there's a play in your monthly payment. So what you're going to see here, for everybody who says, hey, this can't go on forever, the housing market's going to crash, the FHFA, I don't know if they realize it or not, but this is an unintended consequence of actually doing a 40-year mortgage, because people can actually afford to offer more and keep their monthly payment relatively the same based on there being a 40-year mortgage. And the situation changed for every single loan amount, but this is undoubtedly something that will happen. Prices will continue to push higher because of a 40-year mortgage. So I'm waiting to see how this all shapes out. This is going to be interesting, but I believe that we're going to come to a time where the 40-year mortgage is going to be a standard mortgage product in the conforming loan world. And then you're going to see housing prices go even higher. Just my thoughts. This is an interesting one, and we'll be doing a follow-up video to let you know how this all transpires in about a month or two. But I think this is just the groundwork for things to come, and there's no stopping to the housing market. Prices are going to continue to rise, in my own personal opinion. Talk to you guys soon. See you next time on Major Money Matters.